Well, good morning, everyone. It's our pleasure to get together with you today in most weekday mornings to talk about a very important topic. In fact, what we're going to go through is a roadmap. It's a checklist. It's what any entrepreneur needs to know, frankly, should know if they're wanting to get capital to start or grow a business. No nonsense, no exaggeration, no smoke and mirrors, nothing too good to be true, but just simply what it takes to have a fundable business. And we'll also talk about the grant, how we got it, how it works, and how you could benefit from it. If you're interested in teaching this material in person, like at libraries or churches or online, kind of like I'm doing today, we're looking for more financial literacy educators. So we'll talk about that as well. But we have a lot of good information to go through. You will see shared on the screen our website, chapmanloanprogram.org. That's where you'll want to go after the webinar. That's where you'll be able to enroll to participate in the grant. If you want to be one of our teachers, you'll see a link to be a distribution partner. If you're ready to go to funding, there's a link to get funding offers with no hard inquiries. That resource site you'll want to be very familiar with. Let's go ahead and get started. I think it's always important when we decide to spend some time together, because your time is valuable, to discuss why does this matter? Why is this relevant? So let's start with that. Well, the truth is that most lenders and credit issuers will automatically decline applications if the applicant doesn't meet their standards. So often I'll have clients or prospective clients will say, well, can't I explain it away? Or there's some special circumstances. Most often there's not that opportunity. It's typically an automatic approval or decline. So if that's true, that there's this formula that we need to meet for approval, then it probably makes sense to understand it, right? Because it's like getting qualified for a mortgage for a home. There's an underwriting criteria. And if you meet the criteria, you close on the home and you and your family move in. If not, you're declined. You're stuck in renting or finding another home. So we're going to show the formula to get qualified for business funding. Now, when I say business funding, this bullet here is trying to bring your attention to the fact that a lot of people get stuck in the consumer mindset. Everything they think about is as a consumer, but we need you to step away from that consumer mindset and look at this through the lenses of a business owner for business financing through business lending, because it's different. Right? Businesses can get approved for funding more quickly than individuals can. There's different criteria. So you may be an expert on the consumer side, but it would be wrong to extrapolate that and think that's what it takes to get business funding. There's a different set of rules. So we're going to focus on what it takes to get the business fundable. We're not really worried about the business owner's creditworthiness or past track record. We're focusing on creating a fundable business. That's what we're going to be going through. Some people will think, well, I have a new business. It can't be fundable. It can't be credible. And that's a ridiculous assumption to make. Legally and ethically, and we'll show you how today in the next few minutes, we can take a brand new business and position it to be very fundable. So don't make that fatal mistake, that fatal assumption, oh, it's a new business, it can't look strong on paper. That is wrong, absolutely wrong. But it is true. If you believe that and you have a weak business, you probably won't get approved. But we're going to show you how to have a strong business profile, even if it's brand new. Because it comes down to the 3 C's: credit, collateral, and solvency. Otherwise known as capacity. And we're going to help you understand how to have all 3 C's, even if it's for a brand new business. So in short, what we're going to show you is how to have a business that's legally and ethically credible on paper, so that way we can go apply for funding and have a successful capital raise. Now, as we go through this, you're going to learn some things. You might say, oh, no, I don't have that. This won't work. Well, no, we're going to show you what's needed. And then either you can take this information and apply it yourself, which is fine, or you can participate in the grant and we'll do it for you. It doesn't matter. We applied for the grant. We received the grant. Our primary responsibility under the grant is to conduct financial literacy, like I'm doing with you now, like we hope that maybe you'll join forces with us and go out and teach this yourself. So the financial literacy is what's crucial, and then people can either use it on their own or enroll in the grant subsidized program, and we'll do it for them. Doesn't matter, but we need to teach. All right, so we have 10 mistakes to go through. Mistake number 1 is on the topic of a business address. So as we go through each of these mistakes, you could infer, well, this is what doesn't work, but also this is what would work. You're going to learn both sides of what's broken and then how to fix it if it's broken. So we need to have a good business address on record for our business. Now, this doesn't mean you can't work from your Scooby-Doo in your Scooby-Doo pajamas from your back bedroom. No one really cares where you work from or work at. It's what's the official address of the business. Is it credible? And so we need to have a real, unique business address. No, a home address is not going to be seen as credible. A post office box is not seen as credible. We need a true, unique commercial address. Now, it's not just saying, oh, here's my address. It's typically going to be required that you provide a copy of your lease. And that's part of what we do through the grant is provide an address, but also provide you the full lease that can be part of that loan package, that loan application, so you get approved. Now, it used to be that you could use these virtual shared addresses, like with WeWork, which is now in bankruptcy, or Regis or so forth. But now those are even being pushed back on by banks and the business credit bureaus like Dun & Bradstreet. So having a virtual address, if it's not a unique suite number, typically won't work. So in other words, if they give you an address and it's a suite number that they give to other businesses too, that doesn't work. We need a unique commercial address. One other thing to consider with business addresses is that different lenders have different geographic areas that they loan to. Some are national, that's true. Some are regional, some are state, some are by county. So keep in mind that where you form your business will impact the type of funding that you will qualify for. And as we'll talk about more on mistake number 10 when we get to the tail end, there are some unique types of funding like the Chapman Fund that will provide up to $250,000 to start a business, but the address matters in qualifying for that. So in the end, here on mistake number 1, having an address, a unique business address, is essential. It's the starting point for having a credible business. If you have that, great. Check the box and we'll move on to the next topic. If not, we can provide that for you for free through the program. All right, so let's move on to mistake number 2. And as I mentioned, for those of you that just came aboard, we have a Q&A function of Zoom. It's kind of like a chat box. So if you do have questions, comments, concerns, feel free to type those in, and I'll get to those as quickly as possible. All right, mistake number 2, and one other comment. If you decide to help us teach this in your community, when you're teaching it in person, we tend to move a little slower. It's about an hour. When we're doing it online, we need to keep it to 30 minutes or less. So if I seem hurried, it's not because I'm in a rush, but we need to get through this in short order. But if you choose to teach this in person, normally we take an hour versus 30 minutes. All right, mistake number 2, entity selection. What does that mean? Well, to get approved for business financing or even business credit, we need to have an entity. You might say, well, what does that mean? Well, by default, you could have a sole proprietorship or work with a friend or a buddy or a spouse, significant other, and have a partnership, but those are informal types of entities. We should have a corporation or an LLC. Reduces your liability, increases your access to capital, if you were wanting to get money from an equity perspective, in other words, money we don't have to pay back, then a C Corp is typically preferable. Terms of location, we got 2 bullets we're going to address now. So where should your entity be? Well, your entity should be in the same state that your business address is located. So those two need to match, but that does not need to be the same state you reside in. So it's okay to own a business in Hawaii or Alaska or Florida or Texas or wherever. So don't think that there has to be a match of where you live and where your business is. But do realize there should be a match of where your business is formed and where the address is of the business itself. Hopefully that makes sense. Now, through the grant, we'll pay for that. We'll file with the Secretary of State. We'll cover that cost for you. All right, so that takes us to mistake number 3. So again, if you have questions, comments, concerns, type it into the Q&A, please. Business name mismatch. So one of the most common reasons that we see loans get declined is because of an inconsistency with the business name. A lot of you may have multiple businesses or multiple business ideas, and that's fine. We need to separate and treat each one separate, and then there needs to be a match. So the business name that we're applying for funding should be the same as what's listed online, same with Secretary of State, same on the bank account, so forth. So it's okay to have multiple businesses, but for each business, we need to have it set up correctly and make sure the business name is matching. Otherwise, it's more likely to result in a decline. The lease that we're using, we mentioned that in number 1, mistake number 1, having a good unique address with a written lease, that needs to be set up matching the business name, as well as bank statements and other documentation. All right, mistake number 4. Okay, we have a question from Devetta about industry. So what we're talking about today is getting a business or frankly even a nonprofit set up properly. So it doesn't matter if you're forming a business to be a plumber, a banker, a church, a whorehouse. It doesn't matter the industry. This checklist is what it takes to have a credible business on paper for funding. So ultimately, where we go for funding can vary based upon other mitigating circumstances. But what we're discussing with these 10 mistakes is a universal truth. It frankly doesn't matter what you think. It doesn't matter what I think. This is the truth. This is what it takes to have a credible business for funding, regardless of industry. Okay, mistake number 4, not being in good standing. So we want to make sure that your Secretary of State has listed that your business is in good standing with them and active. How you look that up and how that report comes back can vary by state, but it just makes sense that we need to have a business that is in good standing. Now, in many states, you have to file annual reports. Some states have state income tax. We're in Texas. So in Texas, there is no state income tax. That saves a lot of money. But in other states, most other states, there is a state income tax. So not only do you have to be in good standing, you have to pay taxes to them. Our approach is to avoid that taxation because some states, a handful, don't require that. All right, mistake number 5 on the EIN. So regardless if you have employees or not, that's not a prerequisite. We need to have a federal tax ID number for your business. It's kind of analogous to what a social security number is to a person. So we want to have an EIN, free and simple to get. Need that to open your bank account. We're going to need that to build out the business credit profile. And we want to make sure that we use that consistently. So we will then pursue funding under the business, under the EIN. We don't want to be chasing after a bunch of personal loans that reflects on your personal credit. We want the business, to the extent that it can, to stand on its own, get business funding under the business, under the EIN. Make sense? Okay. John's got a specific question, and for specific questions regarding how this will work for you, I would recommend going to the chapmanloanprogram.org. You'll see, and you can complete the 2 steps, which we'll talk about here in a minute. It's hard for us to assess your individual circumstance here on the fly with 535 of you on at this time, but for individual discussions, would love to work with you, of course, individually. All right, mistake number 6, business credit reporting agency profile. Notice we're going to talk about mistake 6 and then, of course, mistake 7. Those are separate. Right now, we're talking about, do we have the business set up properly with the business credit reporting agencies? There's 3 primary business credit reporting agencies. There is Dun & Bradstreet, Experian Business, and Equifax Business. So those are different than personal credit, Experian, Equifax, and TransUnion. We're talking about business credit profiles. So, for instance, if you don't have your DUNS number, we need to have that. That's a unique number through Dun & Bradstreet. So this is the setup. Well, mistake number 6 is not having your business set up properly with the business credit agencies. Now, a big difference between personal credit and business credit is that business credit, we're going to need to spend some time and some effort, and we can do that for you through the grant, but we need to have this set up properly, because what happens is when your business is filed with the Secretary of State, let's just take Dun & Bradstreet, for example, they have access to that public data, so they know that the business exists, and they'll create a profile, but almost always it's incomplete and very likely it's inaccurate. So in other words, it doesn't look good. So if we don't go in and scrub it and clean it up and optimize it, we're less likely to get approved for funding. So that's really what we're talking about here on mistake number 6, is going in and getting those profiles cleaned up so they look strong to the outside world, to lenders. But we help you do that through the grant subsidized program, so no worries. So now continuing that on. So now the profile is set up correctly. It shows your industry code correct, your address, contact information, so forth. So we've got a good profile. Now we need to move on to building the business credit profile. To not do that would be mistake number 7. So again, there are multiple credit bureaus, but on the business side, there's the big 3, Dun & Bradstreet, Experian Business, and Equifax Business. We're going to focus primarily on 2 of those 3, Dun & Bradstreet and Experian Business. We know that business credit scores go from 0 to 100. We want to have at least an 80 score, 80 on each profile. We're going to help you do that. It's not very difficult, doesn't take very long. Now, what business credit scores are called varies by bureau. For example, for Dun & Bradstreet, they call it a PAYDEX score, but yes, we still want to have an 80 or above. For Experian Business, they call it an Intella score. Yes, we want to have it as an 80 or above. How we accomplish that is by adding positive trade lines, primary trade lines, and we're going to help you do that. We're going to add primary trade lines under your business's EIN so we have strong credit profiles. That's what we need to do. That's what we're going to do. That's going to impact our access to capital. But again, we do that for free through the grant. All right, so that takes us to mistake number 8. We're almost to the tail end here. Lack of credible financial statements. This is the one that I have, I don't want to say the most heated discussions with, but the most spirited discussions. So often entrepreneurs will say, oh, no, you don't understand. It's a brand new business. No, of course. No, I don't have good financials. Of course I can't. That's bullshit. Don't fall into that trap. We should be able to form a brand new business today and have strong financials tomorrow. To think different is wrong. Wrong. And I hate to be that strong and that direct, but we cannot fall into this fallacy that my new business, my startup business, has to look weak on paper. That is not true. So there are 2 primary types of financial statements that we're going to help you set up. The first is your balance sheet. That shows your business, not personal, your business assets and liabilities. And you might say, well, wait, right there. This is a brand new business. I don't have any assets or liabilities. Well, the fact that you have no liabilities is great. That means you have no business debt. The fact that you have no assets is horrible. We're going to transfer over, and we'll talk about that in a moment. We're going to transfer over assets so the balance sheet looks strong. And of course, it's legal and ethical. The second type of financial statement is called P&L, profit and loss, sometimes called the income statement. Now, granted, for a brand new business, there might not be any income coming in or expenses going out. So I'll give you that one. So we should be able to prepare strong financials even for a brand new business. And this is legal, it's ethical, and there's ways that we can quickly, rapidly make those financials strong. We also have the opportunity fund that can build out your income statement, profit and loss, and that ties back to helping us teach this curriculum if you choose to, which is not really the focus of our discussion today. The bottom line is we will help you build credible financial statements. For how much? For free. That's what the grant provides. All right, mistake number 9, and this kind of builds off what we introduced on mistake number 8. Mistake number 8, we talked about not having strong financials. Now we're talking about not having collateral. We need to have collateral, and that's reflected on the business's balance sheet. That's the link between the two. So a lot of times, entrepreneurs will come to us, even if they have a business that's been around for a while, and we ask, well, what is your collateral that you're going to be able to pledge for the loan? And usually it's one of two things. Either I don't have anything, which is horrible, we need to fix that. Or, well, do you want me to pledge my personal assets? No, we don't want you to put your house or your family's personal property up. That's a horrible decision. We need business collateral for the business loan. This is what's pledged to the lender, that in case the loan is not repaid, that they have a way to mitigate the risk. Now, it's true, different lenders have different requirements for collateral, but it is certainly relevant even for a startup. So again, don't fall under the trap of thinking, oh, I have a new business, I don't have collateral, it's okay, they wouldn't expect me to. We need to have collateral. We need to have collateral. Repeat after me. We need to have collateral. So we're going to provide you. That's part of how we got approved for the grant. And what's included in the grant is we literally transfer over assets in the form of accounts receivables. Again, it's legal, it's ethical, it's real, and it works. We'll transfer over receivables to put on your balance sheet. So now you have collateral for funding. And then we can turn around and help you liquidate those receivables and turn that into cash. So now you have more bank deposits. It's great. It's the perfect economic model. All right, so here we are, mistake number 10. Kind of wrapping it up. So now that we've done all that we've addressed through mistakes 1 through 9, so now we have a credible business structure in place, and that typically takes 30 to 60 days. So, it's not instant. Now, can we go get tranches or rounds of funding while we're building it out? Of course, but to have a good credible business taking care of everything we discussed 1 through 9, it does take 30 to 60 days, not instant. Now we're ready to go to funding. There are many places that we can go to funding because we have a fundable business. But with that being said, often we hear from people and they overlook alternative sources of financing. So what do I mean by that? Banks are not the only place to get funding from. And I'm not talking about high-risk alternative lenders, don't misinterpret. But let's go back to the Chapman Fund. We introduced that back at the beginning of the presentation. So the Chapman Fund is from a taxing authority. There's money there ready to be provided to start or grow businesses. That money can be used for fixed assets, new construction, renovations, leased property, equipment, inventory, working capital, and other. And it's typically on a 10-year, 120-month repayment term, low interest, low payments. So what's our point on mistake number 10? Realize that there are in addition to SBA funding, there's non-SBA, there's lots of different types, but there are some specific types that are available that are like hidden diamonds, and the Chapman Fund is one of those. So with that being said, we're going to open it up for questions, but this is a good summary page to leave here on the screen as we conclude our conversation and field the Q&A, because this shows how we will help you create a business that's credible on paper to access the capital that you need. In green on the left, it shows you all the things that's included for free. So in addition to the $2,500 allocation that it provides you, we provide you a free unique business address, because we talked about how important that is. We provide free filing with the Secretary of State. We talked about how important that is. We provide free assistance in getting the EIN and then turning around and opening the bank account. Free assistance in building that business credit profile, which we talked about why that's so crucial. We literally transfer over $10,000 in assets, so we have collateral on our balance sheet to pledge to get approved for funding. We talked about how important that is. If you need access to daily deposits, we have the Opportunity Fund. And again, ChapmanLoanProgram.org is where you engage. So with that being said, our 501c3 nonprofit, we started in 2016. At that time, myself and the others, we were all teachers. I taught at Aubrey High School in Aubrey, Texas at that time. I taught Accounting 1, Accounting 2, taught computer programming, economics, and business information management. We actually won the state championship for UIL academic for computer programming that year, came in second the following year. But the point is, it's a group of educators decided, this is freaking amazing. We're here teaching these principles to 16 and 17 and 18-year-olds, and the average adult is lacking the knowledge they need to get their business funded. So in other words, these young children that couldn't even go open a business bank account yet knew more than their parents and their grandparents and their aunts and uncles. So that's why we formed the nonprofit back in 2016. And since then, we have grown, we've received this grant, and now we're looking for two things. We're looking for small businesses or small business owners that would like to participate. And we're also looking for entrepreneurs that would like to help teach the curriculum that we've gone through today, teach it in person or online, and get paid to teach it. Again, on ChapmanLoanProgram.org is where you're going to find the resources to make that happen. So, what other questions does anyone have? And one thing to keep in mind is slides 1 through 9 were all about getting a business fundable. If you already have a business and it meets those criteria, you are fundable now, it sounds like. So go ahead and go to ChapmanLoanProgram.org, and you'll see under the resources a link to get funding offers. So if you have this in place, that's fine. Then let's just go to funding. But if you don't have it in place, there's a decision that you need to make, right? Either go improve, fix, or repair what's broken with your current entity, which is fine, or you can plug and play into the startup business funding package. There's nothing that prevents each of us from owning multiple businesses. We could form a new business together, provide this scope of services, and go get you $250,000 or whatever it is that you're looking for. That doesn't mean that you have to give up or change your other entity. Or if you don't want to have a second entity, then take this knowledge that you now have and go apply it to your prior business. But the grant we received is specifically to go form a new business, take it through this sequence, because there's certainty in outcome. We have a recipe, we have a formula, we have a process that works every time. If you start to apply this to prior formed entities, there could be wild cards, there could be issues, there could be barriers. It could take a lot more time and effort. We don't have the time and effort to go clean up other people's businesses, but if you'd like to participate in this, we know it'll work. There's no risk. So who has questions, comments, concerns before we wrap it up today? Our goal is to keep it to 30 minutes, and we are at the 30-minute mark right now. So again, next step, go to ChapmanLoanProgram.org, two-step process to plug in. if you would be so generous to help us start teaching this in person or online. Under the resources, there's a link to be a distribution partner. And then lastly, there is a link to go to funding right away. If you meet these criteria, then you can go to funding right away. All right. Well, thanks, everyone. We do this daily. We'll see you back tomorrow morning. If you have questions, let us know. We'll be back tomorrow, or you can contact us as shown here on the screen. Thanks, everyone. Bye-bye.